Right, so the first one will be machine learning for enhanced transaction monitoring. And I have heard from a lot of people it reduces a lot of false positives and prioritizes all high risk alerts as well. So that is one very good development in financial crime, I should say. The second one, the natural language processing for adverse media and KYC. Usually, I have come across many places where the adverse media just slips off. And when you have a call from the law enforcement or you get a court order, and then suddenly you realize, oh, we have that customer already and we've not done anything. So, natural language processing will pull out that adverse media stuff and alert the bank immediately to say, oh, this customer is already on our system, and we can start looking through or investigate this customer. And the third one, workflow automation. Given my experience with many high street banks, some are really good and some are just getting there. So a lot of automation again depends inside the bank, inside the financial institution, how they want to do it, how they want to squeeze the time, how much is the staff, how many staff is required at that given point of time. So that one, and which one was I was having? Network graphs. These are one of my favorites. That's what I was thinking. I'm missing something on this one. So mostly to look through the shell companies and through the sanction entities. So network graphs really work very, very well. And it's really nice to see who are the UBOs, who are everything. I'm not an expert in sanctions, but definitely I have seen people using them. So they look really good. And the underperforming tech. I don't have many, but I really get irritated with the generic compliance chatbots, which are just so generic. And I mean, take for example, if your debit card or your credit card, something has stopped working on a banking app, or you want to talk to someone, really you just can't get through. It is just a generic thing which keeps on coming up. End of the day, I just pick up my phone and I just call up the bank helpline to say, oh, listen, this has happened. So it is still not working. So quite underperforming, I can say, and a lot of development is needed on that side, because end of the day, the chatbot doesn't understand whether I'm talking about the debit card or a credit card or an online banking query or a mobile banking query, those ones. And I've come across a lot of pilots for blockchain for KYC. I've just seen the pilots, but I really don't know how are they working, how will it take care of the data privacy issues, how will it take care of lack of standardization as well, and these are kind of major blockers, I can say. Yeah, so okay. This is very good. I mean, first initially focusing straight away on the compliance needs. Check what is inside the organization. So I've done a very good classic job with my current work as well, where I generate a lot of internal intelligence. Speak to your KYC teams, your fraud teams, your AML teams, TM teams, transaction monitoring teams. Come up with those, collate that data, start putting up those scenarios, build up those scenarios on the system, and start doing it, developing it. Data will be there and systems will be there, but before you decide what systems are needed, you need to actually understand how your data is working internally as well. And then go ahead and decide, have meetings, check your losses, what are the fraud losses, what are the AML losses, everything, all that sort of. Build up a sandbox as well, build up scenarios as well, start testing those scenarios, because if you are on the KYC, if you have onboarded a customer, he suddenly cannot become a mule in the first day itself. He can be a mule 6 months later, 12 months later. So those things need to come in. So I would love to see a lot of automation happening on customer onboarding and KYC, because a lot of that work is still manual. Given my 11 years in the industry, that work is still manual. I still come across manual forms which are on the system. They need to integrate, they need to come up, and the electronic or e-KYC, what you can say, it needs to start picking up on that side. Very good sanctions and watchlist screening, which is so much needed in sanctions, and it does really work well. So that is one very good thing. And for transaction monitoring these days, the way we started with real-time fraud monitoring systems, we also need AML real-time monitoring systems now. So on transaction monitoring, you cannot rely fully on a rule-based system. You need to come out of it, and you need to start building up real-time transaction monitoring screening. Also, ongoing and adverse media, perfect, as I mentioned, the natural language processing. And SAR reporting, I have personally written millions of stars now, plenty, because that's one of the part of my job as well. But then it really gets taxing at times when you don't have enough data. So there should be some systems to pull out those datas rather than me and going contacting 10 different teams and to say, oh, do you have this, which delays the reports, which delays your SLAs. So something on that front is very good. And there are many, I don't know, vendors who are doing the SAR reporting as well. And automation where it is creating blind spots. So your system will not pick up the changes in client behavior. So as I mentioned, if it is a mule, he cannot be a mule on the first day itself. If it is a high-risk customer, he cannot be high-risk all his life. There should be something which will come out. Take, for example, traditional banking, where the crypto payments have been stopped entirely, banks are not processing, but those crypto payments have been diverted via money service businesses. Do you have that rule on the system? Are you getting your alerts out to go and review those alerts at that time, which is not there? So it might create a blind spot, and you'll still need some human intervention coming in to think, actually, why are we doing it? The next one, over-reliance on risk scoring models happens. Our system said this, and we have done it already, and we have ticked the boxes, and we are closing the case, and we are going home. It should not work like that. So don't over-rely on the risk scoring models. And data gaps, which will always be there. So your data, whatever you are providing it to the system, ensure it is rich, and that will be like a constant process. Just don't ignore the data, just keep going, building it much, much further. Again, I would put this majorly on internal intelligence on this side as well, because not many companies will have, or the banks will have the budgets to do it, to go and buy systems or to go and change the systems. It will always be with the bigger banks, and bigger banks will go ahead and set an example for you for all the smaller banks trading. But if you see, if we leave all the top 4, they'll be just like there are many smaller banks as well in the UK. So end of the day, the work is piling on yourself as well. Start building internally. Once you have that internal collaboration right, you can start dealing with things. Oh yes, so you get to know what is new in the market, because let me give you an example. I didn't know this network graph of shell companies. So I actually learned it in conferences. I'm like, oh, you can actually do this, and you can actually put it. So it's quite interesting to come and see what are the new things going on. How is the industry tackling the fraud rate, which is currently at 40% of crime in the UK? So what are the vendors doing to get the sale in the market? Definitely, all these conferences and events do help.